Hi everyone, my name is Mary Redmond. I'm talking right now again about the euro pair, primarily about the euro US dollar, but I'm also going to look at the euro versus the commodity pairs as potential trades this week. So I usually don't trade anything before a major central bank meeting, particularly with the euro, because Mr. Trichet and the ECB have, in my opinion, really been unpredictable this year. And have come out with extremely hawkish statements saying that they're going to raise rates when I believe the market just didn't expect it at all. So I think that's responsible for a lot of the strength we've seen in the euro this year. So what we see right now is the euro is in a strong upward trend, and we saw a bullish cross on the ARSIs, the twin ARSIs. We see it on a weekly basis. It's above all of its major moving averages, and actually the primary reason for this is just pretty simple. It's the fact that Mr. Bernanke and the US Fed continue to maintain their dovish outlook, and there's Mr. Bernanke's speech today didn't really change anything in terms of his strategy for the coming months. And what the Fed is planning to do, as they've been planning to do, is end the quantitative easing. It'll wind down. There's a tranche scheduled to wind down this week. Whether or not they'll continue it for a couple more weeks remains to be seen. But at any rate, the US Fed is anything but hawkish. I mean, they're the most dovish central bank in the world right now. So you've got the contrast, you've got the ECB, who has been, actually they raised rates once in 2011, and they've been talking about the risk of inflation. Their inflation rate came in for the EU expected at a rate of 2.7 this year. So it's really not alarmingly high. And most central banks think that the inflation rise that we've seen this year is largely due to commodities, in which case that it may dissipate to some degree. But nonetheless, we've got a very strong upward trend here, and in order to change that trend, I think you probably have to have Mr. Trichet change his stance on interest rates. And you've got the ongoing issue with the sovereign debt problems and Greece getting another bailout. It's really nothing new, and it just doesn't seem to be what the market is focusing on this week, because it seems that they have it under control for the time being in the situation. And the European Financial Stability Fund has the funds available to bail out Greece. Greece is practically in default. I mean, they obviously don't have enough money to meet their obligations on their own. And the ECB and the Financial Stability Fund has deep pockets, so they're obviously going to give them a break on it. But whether or not this spirals out of control in another 3 to 6 months and starts affecting the countries in the core of the Eurozone, nobody really knows. But for the time being, it just doesn't seem to be what the market's focusing on. And so far in his speeches, Mr. Trichet really never talks about this, except to briefly say that the situation is under control and the ECB maintains their mandate for price stability or something like that. So I wouldn't expect him to talk at all about any type of Greece rescue or any type of bailout of any other country this week. I would look for the key words I would look for, last time most of the analysts were looking for, is strong vigilance on inflation. So if he says that again, and of course there's always the possibility that they're going to be raising rates this summer. If they hint at rate hikes, then there are a lot of people who are short the euro-US dollar pair, and there could be a major short squeeze. So what I'm thinking, the first level of resistance is right here around 47.50. So if it does clear that, and if Mr. Trichet makes comments indicating that there's a possibility of rate hikes in the next couple of months, I think it's probable that the euro could clear the 47.50 level, simply because there are a lot of people shorting here and nobody would really expect it. And at that point, I think we could probably have clear sailing all the way up to 48.75. So I don't know any more than anyone else does what he's going to say. On the other hand, if he were to say any indication that he's concerned about disparity levels of growth in the EU, if he would say that risks are increasingly weighted to the downside, any of the type of language that these central bankers use to say that they're concerned about maintaining any type of growth. And the growth in the EU as a whole has not really been spectacular. It's the fact that the growth in Germany and in France to a smaller degree is leading the small countries, and a couple of these small countries are actually in quite severe contraction. So it all depends on what the phrasing is of the ECB, but there could obviously be a very good short and a potential of a real trend reversal if such a thing were to happen, and if Mr. Trichet began to give the indication that he was concerned about growth in the EU. So you've also got the other factor, and because it's unprecedented, nobody really knows exactly what's going to happen when this quantitative easing stops. And in fact, there's a question of whether or not it's actually going to stop this week. It may stop, they may continue it for a couple of weeks, so we have to keep looking on the Fed's website to see what they plan to do. They had said that they're going to continue until the end of June. So it's really unprecedented to the degree nobody knows exactly what's going to happen in the financial markets. But since the quantitative easing has put considerable pressure on the dollar, it seems realistic to think that we're going to have more strength in the dollar against other currencies when this ends, particularly because we're really turning into a bear market right now. And if you look at what happened today in the S&P, it was a classic failed rally. I mean, the market rallied in the morning, it sold off in the afternoon, it couldn't hold on to it. So, in my opinion, we're maybe not in a long-term bear market, but we're in an intermediate-term one. So what you want to do there is you want to sell the rallies like we had today. Selling that rally was actually a pretty good short for a couple of pairs against the Australian dollar. But the other thing that I want to keep an eye on is some of the other euro pairs, because there could be some good opportunities there in addition to the euro-US dollar, primarily the euro against the commodity currencies. So I think the commodity currencies are in the midst of what could be a more substantial downturn. And it's really pretty simple, because when the stock market goes down, the commodity-based currencies tend to go down with it, because the global demand for oil just is a general proxy for global growth. So what I'm going to look at is some of these pairs. The euro-Australian dollar, I think, if Mr. Trichet does take a more hawkish stance, this could be a pretty good move on a break to the upside. It looks like this could be a downward channel, but I wouldn't call it a bearish trend. And I would think that there's a real possibility, if we have additional weakness in the Australian dollar, that we could have a good upward play here. We've also seen in the Euro-CAD, the Euro-Canadian dollar has looked like it's made a double top here, or a triple top here. So there are probably a lot of people shorting at this level, just as there have been a lot of people shorting the Euro-US dollar. So depending on what the central bankers say, depending on what Mr. Trichet says, if we have continued weakness in the stock market, then I would favor this to the upside if they do indicate some type of bias towards raising rates. And the Euro-New Zealand dollar is another interesting one to take a look at. That, I think, is still in a downward trend. And the New Zealand dollar has really been skyrocketing against other currencies. There's probably no real reason for it, except that, the market usually just goes too far in one direction or another. But the Euro to New Zealand dollar still looks to me like it's in a downward channel. So what we could see, it also depends on what Governor Ballard says tomorrow. And if the RBNZ Governor Ballard gives some type of a indication a little bit closer to what the RBA Governor Stevens said, that they may see some softening in commodity prices, or anything that gives some uncertainty about the global outlook, or that risk could be weighted to the downside, well, then I think that the New Zealand dollar would probably make a move down. That could probably be a good short, and that would be probably a short against the New Zealand dollar, US dollar. But if he said anything to indicate that the economy was stronger than we had thought, I'm going to keep a close eye on this, because if Governor Ballard is just neutral or talking a little bit about inflation, and then we get some weakness in the euro, we get additional commentary from Mr. Trichet about possibility of risk skewed to the downside, then this would be a really, really good short. I mean, you could make several hundred pips on this. And I wouldn't do it probably until I heard from both of the central banks. And this could also make a break to the upside, of course, if the opposite happens. So, one way or another, I think there are going to be some very good trading opportunities. I do generally favor the downside to the euro-US dollar, but on the other hand, there are some analysts who are saying that, the ECB may very well raise rates this summer, in which case we could see it back above $1.50 again. So that's what I'm going to keep an eye on, is levels to buy and sell during these central bank meetings. And I think generally the euro is probably going to be a good trade later on this week.